Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Doug Mackenzie, and on today's session, we're actually going to be looking at the state of financial services and how innovation is really driving the changing role for financial institutions. And joining me today, I actually have Eli Rosner, the Chief Product and Technology Officer over at Finastra, who have just commissioned a survey spanning numerous countries to find out exactly this. So Eli, thank you so much for joining us here today. How are you doing?
Doing great. Thank you for having me.
Oh, well, brilliant. So, Eli, with that in mind, for our viewers who might not be aware, could you give them a bit of background to Finastra, please?
Sure. So, Finastra, we're one of the largest players in financial services. We have around 9,000 customers. We provide almost everything a bank needs to operate, close to 95% of what a bank needs to operate. We have everything going from retail banking, treasury, capital markets, payment, trade, cash management, etc. A global company, we're serving countries all over the world. And one of our taglines, or our tagline is that the future of finance is open. And I'm sure we're going to talk about that more in our interview today.
Definitely. Now, I think the best way to kind of kick things off then is, if you could tell us about Finastra's Global Financial Services State of the Nation survey for 2021, please.
Sure. So we did the State of the Nation survey. We wanted to explore the impact of open banking and finance, and to see how emerging technologies and initiatives across the global financial services are impacting the industry. We had close to 800 professionals, as a matter of fact, 785 professionals from within financial institutions and banks, and we did it in March 2021, and we did it across the following countries: the United States, the UK, Singapore, France, Germany, Hong Kong, and the UAE. It delivers a wealth of insights. It's a very extensive research that we did, very interesting comparisons between the different countries, and it's available on our website. So everybody's invited to take a look at it.
Incredible. Now, with that in mind, some of those countries that you've mentioned have really grappled with open banking in extraordinary ways. So, I'm interested if we could start we deep dive into each one of the findings. If we look at open banking first, what were some of the key findings that you found in that regard?
Sure. So what we saw is that more than 9 in 10 of the global financial institutions, they agree, everybody's in agreement. They said, look, open banking is very important to our organization. Almost everybody agrees and recognizes to the fact that open banking has provided benefits to their business. What are the benefits? They vary. A few examples are 63% believe that it enables them to improve the customer experience. And that notion of improving the customer experience is a critical success factor for all the banking industry, and it has become very prominent over the last 3 to 5 years. There isn't a meeting with executives that we're having where customer experience is not being discussed. Close to 60% claim that open banking helped them attract new types of customers. And when those people we talked to were asked about the future, 84% agree that open finance is a natural evolution of open banking. So open finance, the way we looked at it, is that it's beyond open banking and it's toward financial transparency and inclusion. One example could be give the customers the ability to share access to all their financial data online, including mortgages and savings. And by that, by enabling others to get access to their data, to enable those participants in that new ecosystem that's created to bring to the table much more innovative solutions for those customers.
Incredible. Now, creating innovative solutions from customers, having that customer-focused bank, it's almost a change in role. You always used to be just kind of being adverse to risk, offering up these basic solutions, but we're now seeing banking as a service, people actually choosing the bank that they want because they provide the product that they want. Now, I'm excited to kind of see about maybe how banking of a service has impacted the research as well. Did you uncover anything in that regard? Maybe if we could start your answer off by defining what you mean by banking as a service.
Sure. So the simple definition of banking as a service is that banks are providing financial capabilities to any other entity that is interested in consuming that service. It's that simple. Just like infrastructure as a service, you have all the hyperscalers that say, hey, you need a virtual machine, you need containers, here it is. You don't need to worry about it. You need disk space, you got it. It's as a service. The same thing, banking as a service is the ability to provide financial capabilities as a service, where in some cases, you may not even know where the service is coming from because it may be coming through some mediator. So with regards to specifically, let's be a little bit more specific about banking as a service. This is a topic that has risen to the top of the CXO discussions, I would say, over the last close to 24 months.
Yeah.
And it's been getting more and more traction. And people also bring it together with the discussion around embedded finance. The research shows that banking as a service alone is going to make a significant impact on financial services. When we talked to them, we found out that 85% of the global financial institutions, they agreed, I'm going to call it BaaS, banking as a service, will have an impact, and not in the long term or the midterm, but even the next 12 months.
Wow.
Okay, they believe that the impact will be significant. And when we say, what do you mean it's going to be significant? They claim, 81% of them claim that banking as a service will grow their business, will shorten their time to market, and will streamline the company operations. So again, you look at it from the customer engagement, improving the operations, and shortening the time to value, time to market. So if you look at a little bit of a different definition or another way to look at what banking as a service is, it's the provision of a complete banking processes. They're configured as a service using an existing licensed bank and regulated infrastructure with modern API. So if you envision in your mind's eye that the new kind of technology stack from banking as a service, you would always have a regulated entity as a component. Without it, you can't really do any financial transactions. Then you have a middle layer. It could be a marketplace, it could be a platform that brings those services and packages them up in a way where they can be consumed by whoever consumes them. Who consumes them? It could be another bank, or it could be another non-bank. So any company that wants to embed financial capabilities in their customer journey can now take those capabilities and embed them. Simple example of that could be, you go to a travel site, you book a trip, it costs you a lot of money, you want to break the payments, buy now, pay later. So a loan, an account is open for you automatically. A loan is given to you automatically. You don't even know about it. You just clicked a few buttons and said, yeah, I'm willing to pay, a little bit more, but break the payments over the next 6 months. This is an example of embedding a financial capability within a customer journey in a way that is completely transparent to the user. And while we also found out that while the markets, right, broadly anticipate a trend, the financial institutions, specifically in Asia, believe that there's a greater impact on their more than their counterparts in the US and Europe. They're just moving faster with the technology, and we're getting demand in Asia to go and distribute financial services more than we're getting in other geographies. Another way to think about banking as a service from the bank's perspective is that essentially it changes their distribution channel. Because now I'm a bank, I've invested billions of dollars in infrastructure. I have very sophisticated capabilities, but some of them are not utilized to 100%. Just like Uber is utilizing cars that are sitting in the parking lot, but somebody can utilize them while you don't need them for personal purposes. So the same way, now they say, look, if I can find a distribution channel for my service that can bring me to higher utilization, I'm essentially turning a cost center into a profit center.
That's
it's
huge.
A very interesting trend, very strong.
Yeah, because suddenly, because of the change in the nature of payments and the revenue streams, they're being able to, as the bank evolves, the role of a bank evolves, those new revenue streams are going to be ever critical going forward. And I think that's really exciting. And you've touched on something that I think is also very exciting, in the fact that we're seeing demand for various technological investments within the bank increasing tenfold. No longer can you just have this siloed operation of paper-bound ledgers. Now, as you said, everything has to be in a digital machine operating 24/7, sending cross-border payments. All of that has to now be run by the bank. Now, that's absolutely critical. going forward. So I'm interested, did the research examine any other areas where a bank is looking to make technological investments over the coming years? And, has open banking or anything made things like M&As far more easier now?
Sure. So, it's interesting over the last, I would say, 12 to 18 months as the COVID-19 situation developed and hopefully will subside all over the world. The discussions around technologies that can advance financial services faster, I'm sure it happened in many verticals, but financial industry has been talking about those new technologies much more.
Yeah.
So first and foremost, I think that the COVID-19 situation has lit the fire under the banks. And today, the discussions around speed. Sometimes you look at research from the research companies, Gartner, IDC, Forrester, what have you, and you see kind of the curve of the technology curve and adoption. I think that what COVID did is compress this curve to a much faster pace of adoption, because the financial services, just like many other companies, recognize that if they don't digitize, if they don't move fast, moving slow is absolutely a loser. So 95% of the organizations forecast that they will look to improve or develop technology. We're talking in the next 12 months. This is an immediate term. This is discussions in the boardrooms as we speak today. Mobile banking, they got 34%. Banking as a service, 33%, and artificial intelligence at 32%, were identified as the top 3 technologies that can be improved and will improve specifically for financial services and will be utilized, to say better, by financial services in that next 12 months. So it's mobile, it's banking as a service, and it's AI. When we look a little bit deeper, the Asian markets, they're often at the forefront of technological innovation. The UAE at 44% and Hong Kong at 42%, they lead the way when it comes to interest in mobile banking. Singapore, on the other hand, at 45%, with Hong Kong at 40%, are most likely to improve or deploy banking as a service. And interestingly enough, the UAE at 51% is most likely to improve or deploy AI technology. So you can see diversification across the countries, but all of them are talking about mobile, banking as a service, and AI, and how to leverage them within the context of financial services.
It's incredible to kind of hear those 3 tranches to be so pronounced when it comes to just looking at the future of financial services. And I think you're right, obviously many different verticals have looked at these technologies, but maybe none have been so critical to so many people, especially in a time like lockdown and the pandemic when everything suddenly became quite scary to everyone. Now, it's interesting how you noticed from the survey that actually the pandemic actually sped up a lot of innovation in some parts of the bank. But I'm interested, we're still not at the bank of the future, I feel. So have there been any barriers that are potentially holding financial institutions back when it comes to exploring this innovation?
Mm-hmm. I agree. Look, there are several barriers to innovation and moving forward faster. So one of the things is about collaboration. And 94% of the financial institutions we talked to said that collaboration is important to the financial services institutions, but there are barriers specifically with regards to regulation, security, as well as technology. Regulations, and specifically complex regulations, have been identified as a significant barrier by 40% of the global respondents. This was the number one, it was the top barrier for financial institutions in France at 47%, Singapore at 45%, and Germany at 44%. So close to half of the respondents in those countries said that complex regulation is a significant barrier. You can talk today about financial services, and I'm sure others, but it's specifically in financial services without mentioning security. So an increase in security risk was identified as the top barrier by banks in the US, Hong Kong, and the UAE. They all cited security risks as 40% barrier to entry to accelerate the business. And the last one that stood at 48%, specifically in the UK, was the fact that the legacy systems and IT was cited there as a top barrier to entry. So again, you need to look at different countries, different challenges, but when you look at what's happening with security, with regulation, because everything is evolving so quickly, crypto is coming to the table. I mean, things are opening up. What's the future of the financial services industry? Very interesting discussions around security, regulations, and legacy systems.
Yeah, and there's a lot to unpack there because they're all encompassing. I mean, from when it comes to legacy systems, even technology companies like Apple or Google, Amazon, they still have these giant wage packets for developers who have been on and know the original source code. What's a bank going to be like when it comes to moving talent on like that? It's got to be huge, and it's got to be a huge cost. And it's interesting that you say regulation, because so often we hear how regulations like the Payment Service Directive 2 have facilitated innovation, when in fact there's also actually been, on the other side, as you mentioned, a lot of regulation around security that is hamstringing this. And I find that really interesting to find that balance. Now, obviously, you know the survey far better than I or our viewers, so I'm really interested if you've got any kind of nuanced bits of information that really caught your eye when it came to the survey that you'd like to share.
Sure. So a couple of things that stood out in the survey were, one of them, of course, is COVID-19. And the second one was about finding organizational purpose. And I think that the two things are very tightly coupled. So COVID-19, without doubt, it acted, as I said earlier, as an accelerator for businesses to adapt and invest in new technologies and innovation. And 80% of the global organizations we spoke to agree with that. 87% in Singapore, 82% in the UK, 82% in the UAE. They're very likely to agree with those statements that we made. Today, the financial services organizations, they're increasingly looking for organization purpose. So yes, they're all for-profit organizations for the most part. Almost all of them are for-profit organizations. Still, today, in every discussion that we have at the CXO suite and the board level discussions, we always talk about ESG. It's about a purpose. It's about how do you deal with sustainability? How do you help the community? How do you contribute to the community? And 86% of the respondents, it's more than just finance. They said that they have a duty to support the communities that they serve. At Finastra, we call this redefining finance for good. Redefining finance for good. And I can tell you that in every meeting that we have at the ALT or with the board, the topic of how we serve our communities, how we do something that is beyond just finance to the communities, we're very involved in this. And this is probably a topic that could take another 30 minutes to an hour of discussion, what Finastra does. But it's ESG for Finastra is a very big deal.
Yeah.
And maybe one of the key takeaways from the research is the positive evolution of financial services as banks and their customers adapt beyond the pandemic, and the industry helps to better support the communities in which we all serve. And I think that while COVID-19 was a significant crisis, still is in some of the countries, I think that as we recover from this, and we already see some green shoots there, it's going to do better for the financial institutions and specifically for the customers that they serve as they get more involved in their communities.
Yeah, and I think that's going to be critical going forward, Eli, and it sounds absolutely amazing. It's something close to my heart because to me, it is what fintech is all about. And when you dive deep down into it, the subtle ubiquity of financial services, there's a payment connected to everything you do, from buying a house to getting a cab to buying your groceries, to just exchanging anything. There's typically a financial service behind it. And so if you can then leverage that to be improving the world at every micro payment, I think that's absolutely honorable. So I've got to say a big thank you to you guys over at Finastra. Eli, also, I think we're coming up to time. So thank you so much for your insight into the survey. It sounds absolutely globe-trotting, but also the huge amount of numbers. It must have taken you guys a lot of work. So thank you so much for your time.
Thank you for having me. And I really like your quote at the end there where you said, every micropayment touches a human being.
Yeah,
and we
exactly.
should all know that.
it rolls on, doesn't it? It just keeps going. And so, Ellie, once again, thank you so much. And also to our viewers, you can catch the rest of the series and much more over at www.fintechf.com. And of course, YouTube and LinkedIn, where I'll see you in the comments. So thanks again, guys, and see you soon.